All right. All right. So now that I'm able to sit down and the market has been open for the last 2 hours, this is the Asian session. So Sundays are usually a markup day and it's like your prep. Now, I am in a group where we do have coaches and things like that. That's something I didn't share with you guys. And this is something we've been doing for quite some time. Your Sundays are your prep for what is going on in the market. And I kind of want to um yeah, I kind of want to just, mark up my chart so that it's prepped for tomorrow. I feel like that's a good range right there. And if I were to do a long position, hmm, this doesn't make sense. Hmm. Possibly? I don't know. I wanted to mark this up as like the dealing range for the daily. That's what I want to do right here. Controlling range is something that I'm learning now, and it deals with market structure. So it is part of market structure. Let me just close this door so nobody is talking. Cool. That way we can focus. Now, as you see this arrow, I'm going to leave it until I feel like that analysis is wrong. That is a long-term analysis dealing with the monthly bullish fair value gap that we have below. Now, when we are looking at this chart, what is this right here? What is that? Okay, whatever, it's gone. If I want to talk about my trading journey thus far, we are up in profit. Had this been in an eval or a funded account, I probably would have been halfway there. Um, I've been consistently. I've only had one bad trade. I lost $103 or $113, and I've been able to accumulate at least $300 every day, and that's my goal. So we do have this small gap right here. This is the most um, prominent high. This is the most prominent low that hasn't been broken, and we've kind of been like consolidating on a downtrend. Now, if I'm going to do analysis, okay, if I'm going to do an analysis, I'm looking at, and I just marked these out as like it being a range. If I were to mark out, let's say from here to here, that's what I wanted. Boom. Drag that across. If we were to create this as an equilibrium like this. Mm-mm-mm. Draw a line, boom. That could be considered daily EQ. Equilibrium is just the middle point in between your dealing range. This is still so very much a premium. And this is, so this technically is what we would be looking at if we were to see price come down into this small fair value gap, which is between this candle and this candle. You see this like window of gap. None of the wicks are overlapping each other. And I'm not going to go into a bunch of details about things. I am going to explain some things because I feel like if you guys want to learn, you can learn through the person that I learned through. Um, because I did come in with more of a retailer trade mindset. I started in options and then I got introduced to how to read price action completely. And I'm not an expert, so if you're watching this and you're wondering like if I'm a know-it-all, if I know what I'm talking about, then I do. I feel like I do to a certain extent, right? But I still could be wrong. Daily, bullish, for real, you got. So this actually makes sense. And anytime that you are dealing with premium or discount is the lower portion of the range. Your moves make more sense when you are buying. So if it does continue in a downward motion and hits this, I know this is a good day to buy. Mary time frame is the daily, I think the 1 hour and the 5, the daily and the 1 hour, and then the 5 minute being the entry because the 1 hour and 5 minute are Mary time frames. So if I look, and we already broke above this high, we are resting within this right here, this fair value gap, and we're kind of above, still much, very much so in a premium. So hmm, I honestly would rather see price be bought down here than opposed to here. And I just marked that out, but it doesn't necessarily mean that's something that I would utilize as a point of interest or what we call POI. But if I were to mark out my range, the only range could be from here to here, then it was broke. So from here to here, still so much, it's still very much a premium. Yeah, like look at that. Still on the red. This got played out. That was a fair value gap right there. That got played out, but we did break above this high. We could be creating higher time frame market structure. Higher time frame market structure means we sweep, we break, and we pull into a point of interest. Now, a controlling range would be this high and this high, I believe. And I still don't like the play, but let's see how accurate it is. Ugh, let's delete that by going down to a Mary time frame. So we did have some sort of gap up, and boom, price did break. As it broke, let's go down into. I might put a trade in. Let's do 1 minute. Boom. We do. So what I'm gonna do is I'm gonna just buy two. I'm gonna buy two, and my stop loss will be right here, right there. Um, but did we sweep? No. Did we sweep? What did that make sense? I don't know. I don't think that made sense. Right? If I were to, my TP would be, let me see. It would be this high technically. This is not even a 1 to 1. And I'm not really comfortable with this move, but what I will do is um let's do right there, and then we will do oh, you know, this is a 2 to 1. It'll be, and from here, oops, not that. 2 to 1 is right here. And price shoots up, but doesn't mean anything. All right, whatever. We will just aim for $300. This you usually want to aim for 2 to 1, so I technically would aim for up here. But if we look on a higher time frame, what are we aiming for, right? That high, which is like okay. Let's chop this. Price is just gonna continue to go up. I feel like it's gonna continue to go up. This is the gap that it created. Shout out my boy Joe for information and his accurate analysis because of where price left off on the market on Friday. We created this gap, and that's another part of analysis that I have to break down myself. I'm not going to break down in this video, but there are reasons why we gap down. Sometimes price struggles. Yeah, you get strong moves like this, and you have to be aware that price can go down in the opposite direction just as well as it, however much it came up. So I might just call it quits out of this move. But if I were to do a 2 to 1, that's where I would be aiming for. But we're just looking to make 318. And then going back to dividing, it looked clean because of the 4 hour. The 4 hour is a higher time frame. So when you're looking at that 4 hour, we are in a gap. But remember, this is a premium. This is a premium market, I believe. I might just, yeah, I might take my, let's do this. If it goes any lower than that, I'm cool with $39. I'd rather take $39 than I go in a negative because I move too fast without being patient. And this is the part where your psychological where the psychology, I'm sorry, my words are being all twisted up, where your psychology needs to be on point. Like you need to be sure. You need to like I just jumped in here and I'm breaking down this analysis for myself, but I'm not being patient, right? This move still could play out. It's got a very look how strong it's pushing, you know. But like I said, I've seen moves like this to the point where it shot up, but then the next 15-minute candle said, you shot down because it was grabbing liquidity. It was aiming down here before the move was actually being manufactured for us. And these are all manufactured moves. So I'm cool with that. I'll take that. We will grab this guy. I don't. Let's go to the 1 minute. This is where I'm at. Fell on a break above. And we did have all of this. Let's see if market structure actually played its part. No. Boom. So push come to shove, I'm $39 up, right? But this shows you um that you need to be mindful. We didn't have any sweep. We did kind of break down here, but anytime we have like market structure, I always like to see like a little bit of a clean sweep. Sometimes you don't get it, you just get a break above. All right. Let's go to our 15-minute. This is very oh, my stomach is I need to eat something. But this is very much so a gap that could be playing out right now. Um, it could be an inverse. In order for this to not make sense, we have to break above here. So I'm going to this instead. I'll just put a little bit of an alert right there. And then I'll put an alert if we break above. What was the last candle? Let's see. Break below here. And that way I go about my business, right? But this candle could easily just push all the way down, right? It could literally violate. It can go up and come down, and I've seen it happen many times. So we secured something. Shout outs to uh, my boy Devon because he explained the importance of anytime that you get in a move and you make sure you're trying to like break even or break a little bit above even. Um, that little $39, I could have easily grabbed a quick 100 off of that, but I'm happy. $39 is in the green and it isn't something that I'm upset about. Now, will I jump back in? I will see. I have to be patient and see where price is going and what it's doing at this moment. We are in a premium market, and I don't feel like these moves make any sense, right? They make sense, but these aren't the moves that I'm looking for. I'm looking for a more clean structure move. And sometimes you're not going to get that. Sometimes you're going to get like dirtier moves where everything price is very choppy. So that 4 hour, let's treat this as a 15, go here, treat this as a 4 if we do comparison side by side. Even though we have this fair value gap, it's creating this like it was and we won't know until the candle actually finishes within an hour. So we have this candle that could have started off very much so bullish, and now it could just be going the opposite direction. It could be looking to sweep this right here, grab some more liquidity, and if it is going to go higher, I was looking for more of that daily play than opposed to. And look at that. Look how price is dropping. This is exactly what I was talking about. It's exactly why you need to wait and be smart. That could have been a dumb move to not take that $39. And there's people that will chase these candles, which is dumb. Candles can react. Hey, did I? Hold on a second. What's going on? Okay, let's go to our daily. I felt like okay, so the daily. Oh, the daily is down here. And remember, we are in this like downward. We're in a downward trend. All right. That's where I'm looking price to go up from here, boom, and then go like that. And I have it, you know. We could be going down even further into the monthly, but we will see. I'm just gonna bring this over here so it's like not in the way. But yeah, we have this daily bullish fair value gap. That makes sense. It's in the discounted proportion of the dealing range for okay, for this to make sense, for this to mean we're buying low and then we're gonna sell high, right? And then our high would be to knock out all of these highs that were left. And as we continue to knock out each one, um, this is the last high, the highest high that we're looking to take out. But right now, price is fluctuating, it's very choppy. We have that gap down. Then we want price to show us what it's going to do within the next few. And usually around like 7:30 to 9 o'clock, you get this pretty good movement in the Asian market. Let's see what the 10 o'clock 4 hour candle brings us. I'm not going to keep ranting on this video. Um, this is a paper account. It's not like I'm hiding anything. Let me show you. Oh, where is it? Is it down here? Oh, I know the problem. Right here. So if I were up, this would be how much I would be up. And it goes to show you that a consistent trader can absolutely accumulate $89,000. I started with $100,000 account and I grew it to $89,000, almost doubling the account just in paper money. Now I'm using real data. I bought real data. You know, I think it's important that you buy real data because real data allows to beat the 10-minute delay. Let's go to balance history. Um, it shows you all my trades. I think my this is the I was taking some pretty big trades. This is 2025, 2025, 2025. But for so much person like myself, we've had one bad day. Then the next day we came back and got that money back, right? And these are recent days. You can see these are recent days. 549, I didn't trade again. I took the L. I was like, all right, cool. Then I got 640 off the next one, right? Um, then 294, $51. I think I took this and I left it at that. It was more of, let me see what price is doing, just like you see the $39. But as you can see, we're in the green. We're still in the green. This happened recently, broke even, got it back. So I was happy with that. And with this last one, which they're not showing, oh, they are. Oh, $118 was my trade that I went into the Asian market, lost, but my position was very small. Um, and I'm cool with that. And then this recent trade that I just took, I got $33. So that's it. You win some, you lose some, but you want to win more than you lose. And that's the game. Then you want to compound all these accounts. So I reached for $300. That's why most of these trades lately have been 300. The only reason why I have a $606 trade is because I accidentally added more contracts than I wanted. I think it was like 8 contracts, but most of these are 3 contracts. But that's it for this video. I'm not gonna go crazy about the analysis and all that. I want you guys to do your own studying. Um, if you have any questions that I may be able to answer, just like put in a comment section. Uh, my videos are steadily growing. I've only got like a small amount of viewers, but it's okay because I'm grateful for the people that have watched, and I try not to keep these videos too long. But this is what we're working with, and what you'll see is in the next couple of videos, and it might be in like a week or so, I will start posting more like prop firm evaluation content, and then passing those, and then going straight into funding. And funding is no joke. You got to be very much so confident in your trades and believing in them. So, all right, man. You guys be easy and God bless.